please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Straight to the action from the last read then, where a powerful short covering rally saw markets gain about 1% in trade, a relief from the weakness seen in the last few sessions. The Nifty saw a sharp rally in the last hour to reclaim the 10,500 mark, while the Sensex rallied more than 1%. Banks outperformed, gaining 1.5%, but mid-caps ended with cuts of about 0.5%. Anuj Singhal joins us with a wrap of today's trading action. Anuj, a dead cat bounce, or have the bulls found their mojo?
Well, powerful short covering move today, especially on the large cap side. The mid cap index still ended in the red, but on the large caps, there was a nearly 100-point rally on the Nifty and 350-point rally on the Bank Nifty. What was interesting today was that the largest components of the market, the banks and IT, both did well. IT did well through the day, and Bank Nifty had a last hour surge because of weekly options expiry. So it was a perfect cocktail for the bulls today. As I said, IT stocks led the rally, so TCS, Infosys, Tech Mahindra were higher. Banks, and especially the corporate-facing ones, Axis, ICICI, SBI, had a big rally. Other index gainers today included names like Bharti Airtel, Sun Pharma, and Tata Steel. On the losing side, Tata Motors, after the numbers, yet again a 52-week low for that stock. ONGC and GAIL were also lower. GAIL after the numbers, and ONGC on reports that perhaps it could be forced to share some of the burden. In the F&O space, some big gainers included names like Just Dial, NCC, post the numbers, and Kaveri Seeds. But on the losing side, we had some big names like Granules, Bharat Forge, Motherson Sumi, Jet Airways, Oil India, and Jain Irrigation. Let's see if this is the real deal and the market has made a bottom. Today, of course, smacked off short covering. Also, quite a bit of bargain buying in a lot of large caps. Mid cap, of course, still remains a bit of a problem.
All right, Anuj, we'll leave it at that. Thank you very much for joining in. Now, the currency market is also squarely in focus. A dovish set of minutes from the US Federal Reserve's meeting have trimmed gains on the dollar. The currency is trading weaker against a basket of major currencies. As a result, the dollar index is now below the 94 mark, stepping back from its 5-month highs of nearly 99. Emerging market currencies, which have been witnessing a sell-off due to a stronger dollar, got some respite today. The Turkish lira, with the help of intervention by its central bank, narrowed losses. The Argentine peso is also near the 25 mark to the dollar, and after having plunged over 8% last week. The Indian rupee, though, is seeing some resilience to the 68.33 to the dollar. Crude prices, in the meanwhile, have let off some steam after reports emerged that OPEC members will hike oil production. This after worries pertaining to supply from Venezuela and Iran. A surprise build-up of inventory in the United States also added to some pressure on the crude prices, and as a result, Brent crude futures are trading below $80 a barrel, while WTI NYMEX is trading at the $71 mark. It's not clear yet if the drop in crude will be enough to compel a reduction in fuel prices in India, which today have seen the 11th consecutive daily upward revision. Today, the price of petrol in Mumbai stands at 85.29 rupees per litre, while diesel will retail at the pump for 72.96 rupees. Staying with that space then, ONGC tumbled over 11% intraday today, and while it recovered from the lows, it still ended 4.4% lower in trade. That punishment for the stock followed news that the government is considering a windfall tax levy on oil producers in a bid to control the prices of petrol and diesel. According to sources, the cess will kick in when oil prices cross $70 per barrel. So under the scheme, oil producers will have to part with any revenue that they earn from the prices crossing the $70 threshold. The revenues thus collected will be used to pay fuel retailers to help them absorb spikes beyond the threshold. Speaking to CNBC TV18, former ONGC chairman R.S. Sharma said the move will be a big loss to the credibility of the government. Listen in.
This will be a big loss to government's credibility. They have gone on record in international fora, roadshows, that we have deregulated the sector, and these are the reforms measures we have taken. Now, immediately going back on that, I feel the credibility is going to be majorly hurt. As it is in the exploration, no international companies are coming because of the contract stability, because of the constantly government changing policies. So this would be the loss to the sector
From policy then to the insolvency corner, in what comes as a relief for Jayaprakash Associates, the National Company Law Appellate Tribunal, that is the NCLAT, has stayed an NCLT order directing the company to return around 760 acres of land to its subsidiary JP Infratech. The NCLAT has also allowed lenders of Jayaprakash Associates to mortgage that land. Ashmit Kumar, who has been tracking that story, joins us now with more details. Ashmit, what was said in the court today?
It's a big relief coming in for JP Associates by way of today's NCLT order. How does this relief actually flow to JP Associates? Allow us to explain. As far as JP Associates is concerned, it is the parent company of JP Infratech. JP Infratech is the company that's facing insolvency proceedings, and the transaction in question essentially is when JP Associates had used a land parcel, a 758-acre land parcel that belonged actually not to them but to their subsidiary JP Infratech, and that land parcel had been used to secure a loan that had been extended to JP Associates. The lenders in question were three private lenders: Axis Bank, ICICI, as well as Standard Chartered. Now, the concern that had been expressed by NCLT by way of its recent order is that this transaction appears to be fraudulent because the asset lies on the books of JP Infratech, but it is being used to secure a loan that is being extended to JP Associates, which is the parent company. Because of this, NCLT had declared this entire transaction to be fraudulent. Now, it is an appeal against that the three private lenders had come. The three private lenders said that this is a very common transaction. Promoters are known to use assets of their subsidiaries, especially if it's a 100% owned subsidiary, to secure loans, and that there is nothing unnatural or malified as far as this transaction is concerned. On the back of that, NCLT has passed a three-part order. The first part essentially is that a notice has been issued. All parties will be heard naturally. The second part is that as far as insolvency proceedings are concerned, they will continue unabated. No question of any restrictions there. The third part is the most critical. NCLT has provided that as far as the mortgage is concerned, it will continue to rest with the lenders, and in doing so, it has effectively stayed the NCLT order. What this effectively does is that it is a relief for JL because it will now not have to cough up a fresh security of about 2,000 crore rupees. So to that extent, relief coming in for JAL. The next date to watch for will be July 13. That's the next date of the hearing. Back to you.
All right, Ashmit, we'll bring you back with more action from that space. Thank you very much for joining in. But staying with action from the insolvency space then, the NCLAT has allowed for both Tata Steel and Liberty bids to be considered for Bhushan Power. It has also directed the company's lenders to enclose their final decision on the bidder in a sealed cover. In fact, the Committee of Creditors had sought a fresh round of bidding between Tata Steel and Liberty House, which was opposed not just by the companies but also declined by the court. So the next hearing on the matter will take place on the 12th of July. Meanwhile, CNBC TV18 has exclusively accessed a letter written by Dalmia Bharat-controlled Rajputana Properties to the resolution professional and the lenders of Binani Cement. This is to explain why it will not revise its over 6,500 crore rupee offer for Binani Cement. Now, explaining the rationale behind this move in the letter, RPPL has alleged that the May 15th order of NCLAT has been misinterpreted by the COC and the RP. It has said that the Committee of Creditors must first determine the eligibility of Ultratech before it asks Dalmia Bharat to revise its offer. The letter also goes on to say that a minimum time of 10 days must be granted to the company to consider a revision in its offer, and the 3 days granted earlier was too short a time. On to another CNBC TV18 exclusive then, we learn from sources that the Law Ministry has submitted its view on sugar cess to the GST Council. The Law Ministry has opined that under Article 279A, the GST Council has the power to recommend cess for any commodity under GST. Timsy Jaipuria is here with more details on this story. Timsy, what is the Law Ministry's view on the matter, and what will be the course of action now for the group of ministers on sugar cess?
Well, that's right. What we understand from sources as of now is the fact that the Law Ministry has submitted its view on sugar cess to GST GOM headed by Assam Finance Minister Himanta Biswa Sarma. What we understand that Law Ministry has given a view that GST Council under Article 279A of the Constitution can recommend a cess on any other commodity which is under GST to the union and state governments, and it will be up to them to decide whether they should levy a cess or not. not. So this view actually nullifies the entire discussion, the entire issue of the fundamental question under GST, whether there can be a cess or not. So now, on June 3rd, when GST-GOM meets again in Mumbai, they will deliberate upon the view of Law Ministry. They will also discuss on what should be the quantum of the cess which will be levied, if at all it has to be levied. And yes, not to forget how this cess will be distributed to the sugarcane farmers and to the sugar mill owners. Back to you.
Now, Tata Motors was in focus today after posting a weak set of numbers for its fourth quarter. Top brokerages cut the target price for Tata Motors as JLR hit a speed bump in its quarterly numbers this time around. However, the company's management is confident that things will improve in this fiscal. Talking to CNBC TV18 Sonia Shenoy, Tata Motors CFO PB Balaji said the company had a plan in place to overtake its rivals in the passenger vehicle business.
If you look at the EBITDA margins for JLR, they've come up substantially to 10% by the end of FY18. Back in the day, about 4-5 years back, you were doing almost 17-18%. So is it safe to assume that because of all these cost-cutting initiatives, etc., you will get back to the high teens?
That's the only way we'll deliver 4 to 7% EBIT. Therefore, EBITDA has to improve by the same 300 odd bips that you're talking about in this period. Back to where it is supposed to belong.
Talking a little bit about the domestic business, of course the standalone business continues to be under pressure. This time we've seen the margins come in at about 7.5%. Even if you make the adjustments, it's about 8.5% or so, less than what you've done in the past. This despite the medium and heavy commercial vehicle segment being on an upcycle. So is it purely the passenger vehicle segment which is becoming a drag, and will that continue?
Okay, I think as far as the domestic business is concerned, this year we have turned PBT positive if you adjust for the one-offs that we have taken. For the quarter, we are actually screamingly PBT positive. Yeah, we are cash positive after 5 years, which means you should be clear that it is only a one-off impairment charge that is making the number, because there is real cash coming through. The margin improvement in CV is significant as far as this year is concerned once turnaround got called out. At the same time, passenger vehicles is now starting to sequentially improve its contribution margins, because better mixes are coming into the market. Cars are better margins, and better well received by consumers, which is the reason now we have picked up shares 2 years in a row and have exited at 6.8 share. Definitely not where we are satisfied with, both in CV and in PV. Shares have to be much higher than where they are today.
So what are you working with as an internal target for passenger vehicle market share?
The vision that we have put out is we should be a very strong number 3 player, which I think is within the realm of achievability. So therefore we said, let's first get to that, because before you summit the mountain, you first have to hit base camp. So base camp for passenger vehicles is, let's get to a strong number 3 player.
All right, the Cabinet's approval to the amendments in the bankruptcy code, which gave home buyers the rights of a financial creditor, has created quite a stir among home buyers as well as the bankers. Manisha Natarajan spoke to the Urban Affairs and Housing Minister Hardeep Puri on how helpful this amendment will be in resolving the mess of the insolvent realty companies and their home buyers.
We have been arguing all along from this ministry that the home buyers are in a particularly vulnerable position, and that they need to be safeguarded in terms of their interest. Now, they have contributed to the development of the asset, so I'm glad that the position of financial creditor has been accorded to them. Will this solve all their problems? Well, I don't know, and perhaps not all their problems.
For home buyers, it's a personal pain.
It is
for
a personal,
banks, it's an institutional pain.
No, it's just not an institutional pain. The bank can also go down. And the home buyers, I would like to think that for a first-time single home owner, it is catastrophic, I can tell you. It is catastrophic. But not everyone. And now I'm going to say something which is not going to make me very popular with home buyers, but I hope they realize by now that we are batting on their behalf, is that some of them are speculative investors.
Right.
And that is why some of these problems have arisen. If you were a genuine first-time home buyer, and my heart goes out to them, believe me, I know what it is to take one's entire life's earnings and put it into one basket, one home, and then find that you have been shortchanged by an unscrupulous buyer. I think the correctives are taking place.
And they will get a resolution.
Of course they will get a resolution.
It's not going to be immediate.
No, Manisha, but if you tell somebody you will get a resolution, somebody who's been waiting 7 or 8 years, you don't become very popular by saying you will get a resolution one day. But I tell you, there are some ground level changes. For instance, on the value of land. Believe me, the differential between Delhi and Noida, that differential was to a certain extent equalized. Not equalized, I would say, differential was reduced because you had the Noida toll bridge. You had the metro going there. The differential in land values between Noida and Greater Noida, again, because of the expressway, again, metro going to Greater Noida, etc. The building of the next airport in Jiwar, that will also help. So I think there are a situation, and the market doesn't always go down. The market is characterized by mismatch, asymmetry. There was an excess supply in certain segments that needs to be corrected. So when the solution comes, what I'm worried about is that many people will turn around and say the solution is not exactly on the terms on which they wanted the solution.
Agree.
You know, when you are in a, what I would say, dire straits, and you look for a solution, a lot of people will have to take a haircut. And that haircut, thank God, will not only be the home buyers. That's the good news.
Lots of protesters going missing. What are you picking up?
Well, like you rightly mentioned, Ritu, there is an uneasy calm that has descended on the town of Tuticorin. But even amidst this calm, communication lines are down. There is no internet. We've traveled 78 kilometers to bring you this update. But even as the city kind of simmers, two big questions remain. Question one, is this the end of these protests? And question number two, what really goes, what really becomes in terms of these protesters and the fact that a number of them are injured? The answer to the first question, well, the protesters are telling us that this isn't quite the end. The fact is that the order of the Madurai bench of the Madras High Court notwithstanding, they want the Sterlite copper plant closed. And question number two, with regard to what exactly is happening with regard to these protesters who are injured, the fact is nearly 70 of these protesters have gone missing. We've been picking up sound bites from relatives, from victims of shooting, who've been telling us that a number of their relatives, friends and loved ones have been picked up randomly by police and taken into preventive custody, which they say is illegal considering there is no warrant, and, well, they're calling this alleged illegal detention. So the fact is that while there continues to exist a law and order situation on the ground, the big question continues to remain. They don't quite know as yet who ordered those controversial shootings just a couple of days ago. So more questions than answers, really, even as a new collector. Sandeep Nanduri took charge today and left it at the hands of that one-member probe team to come to these conclusions with regard to the Tuticorin violence itself. Back to you.
Jude, thank you very much for joining us. And as he says, more questions than answers at the anti-Sterlite protest in Tuticorin. But with that, we're at the end of this edition of Reporter's Diary. Thank you very much for watching. But do stay tuned for Markets Today Talkback, where we get you all the market experts to answer your market-related queries and help you manage your portfolio better.